Well, clearly we're seeing an evolution that's basically being begotten by the regulations themselves. So banks are making rational decisions as to whether or not they need to offer CSD services, and what we are seeing, I think, is the fact that it's not going to be necessarily a level playing field for the global custodians going forward. When you look at the ability to settle in central bank money, the fact that CCP requirements have to be held at CSDs, this is really going to reshape the way that the business looks and the ecosystem develops. I think it's a bit early to say who are going to be the winners and losers from this, but what we can see is that it is going to basically cause a separation between some of the services that the custodians were offering and the CSDs being able to compete with them in that space, and really potentially a changing of the barrier between the two. It's going to be interesting to see which way that goes. You would assume that a change in the competitive landscape and an increase in competition would lead to a decrease in pricing. But one of the things that came out of the panel discussion was that there still seems to be a lot of uncertainty throughout the market as to how much cross-border settlement is going to cost us going forward post T2S.